Hi, this is Lara at Elliott Wave Gold with your daily analysis for Thursday, the 2nd of July. I'm recording today's video 5:35 almost PM Eastern Standard Time on the 2nd Eastern Time. I was expecting just a little bit of upward movement to 1180 before some strong downward movement. That's not what happened. Price has moved lower. It's moved low enough to invalidate how I had the bull wave count and give quite a lot of confirmation to the bear wave count. The bull wave count now has some serious trouble. It's now got a very low probability. It looks like we are breaking out to the downside. So it's increasingly likely that the trend is now down, although ADX is still telling us there's not yet a clear trend, but it does lag. We will have final confirmation for the bear count with a new low below 1131.09. In the very short term, in the next 24 hours, I expect a small second wave correction to complete, to be followed by more downward movement. We'll look at the bear count first because it now has quite a higher probability than the bull. The bear wave count sees cycle A and primary 5 within it incomplete. Primary 5 will reach equality in length with primary 1 at 957, and we can have confidence with that target with a new low below 1131.09. Within primary 5, the third wave begins here with an extended first wave, a time-consuming but still shallow zigzag for a second wave, another first and second wave, another first and second wave, and another first and maybe a second wave, or 1, 2, 1, 2. Either way, we've now got a series of overlapping first and second waves. If this wave count is correct and volume does support it, then we should be starting to see in the next couple of weeks or so some very, very strong downward movement ahead. Minute wave 2, if it were to continue any further, may not move beyond the start of 1 above 1232.49. That price point must be passed for the bear wave count to be discarded in favour of the bull. Let's have a look actually before we go there. Minute wave 3 will reach 1.618, the length of minute wave 1 at 1093. This high here is minuet wave 2 within minute 3. We have 1 and 2 ended here as an expanded flat, this high here. I have two hourly counts for the bear today. This first one sees downward movement as more overlapping first and second waves. I have the end of subminuet 1 now a little bit higher. This piece of movement here on the 5-minute chart, and I published it in the comments for yesterday's analysis, it fits and looks perfect as a 5-wave impulse. So I expect that subminuet 2, if it's over here, it was an expanded flat, subdividing 3, 3, 5. The subdivisions fit perfectly on the 5-minute chart. It's quite difficult to see exactly where subminuet 1 ends. It certainly could end here. There's enough little possible fourth wave corrections in here for that to be correct. A problem with this wave count at the hourly chart now is the brevity of subminuet wave 2. This is very, very quick. It's quite shallow and quick, and we may expect to see shallow, quick second wave corrections begin because of the strong downward pull from the middle of a third wave, but I really would have expected subminuet 2 to last longer than this and be very likely to show up at the daily chart level. And the next chart we'll go to after the hourly charts will illustrate exactly why that's a strong expectation. But the subdivisions fit here, and the alternate has a big problem. I've checked this downward movement so carefully on the 5-minute chart. It certainly can subdivide as a 5-wave impulse. We've got some quick fourth waves and some strong fifth waves in there. Here, for micro 2, I expect we have 5, 3 and an incomplete 5 up. Micro C has moved beyond the end of A, but it has to be a 5-wave structure, so I'd expect a little bit more upward movement to complete that. Micro 2 may not move beyond the start of 1 above 1179.17. The targets for both hourly charts are the same, and the expectation of strong downward movement to come is exactly the same. Minuet 3 will reach 2.618, the length of minuet 1 at 1111. It's also possible, this alternate is identical to the first hourly chart here, that subminuet 2 was not over here and that it is continuing sideways as an expanded flat, subdividing 3, 3, 5. Here, micro A, the subdivisions are seen in the same way. I've just moved it down 1 degree. This too is an expanded flat, 3, 3, 5, and this upward movement is seen as a 5 because that's how it subdivides at the 5-minute chart level. And now this downward movement does look quite corrective, and it does fit reasonably well as a double zigzag. It fits better as a double zigzag than it does as an impulse for the first hourly chart. But the very big problem with this idea here is the depth of microwave B in relation to microwave A. This is 2.17 times the length of micro A. There is no rule stating a maximum length for a B wave within a flat, but there's an Elliott wave convention that says it's unlikely it's a B wave once it reaches twice the length of the A wave. But I have seen expanded flats where B waves are longer than that convention, and we had one back here which surprised us. Minuet wave 2 has its B wave, which was 2.9 times the length of its A wave, but in hindsight that's how it subdivided. It was an expanded flat with a long B wave. We might be about to see that again. 3, 3, and we need a complete 5 up. Extremely likely to move at least slightly above the end of A. So for this idea, the first hourly wave count would be invalidated with a new high above this point at 1184. Micro C would reach 2.618, the length of micro A, and that's reasonably close to the 0.618 Fibonacci ratio of subminuet 1 at 1181. So that's the target for some more upward movement. It may complete a green candlestick for Friday's session, and that would give the wave count at the daily chart level exactly the right look. The targets for the third waves to end are still exactly the same. Subminuet 2 may not move beyond the start of 1 above 1188.16. Having a look back at primary wave 3 on the daily chart, and this goes back to 2012-2013, primary 3 begins here. Primary 3 has a 1.618 price ratio to primary 1, and all the subdivisions within it right down to the hourly chart level fit absolutely perfectly. We have intermediate 1, intermediate 2 a zigzag, and now within 3, 1, 2, 1, 2, 3, 4, 3, 4, 5. It was the fifth wave of minor wave 5 which had the strongest piece of downward movement. Within it, it was its third wave, and in here it's the fifth wave in here, which is the strongest piece of downward movement. The equivalent of where we are now within primary 5 would be about here, and so that's what I mean by we may have some really strong downward movement to come. Notice how gold starts its third wave extensions with series of overlapping first and second waves, and notice how it's the fifth waves which often include the strongest piece of downward movement. And that's really typical of commodities. Gold often has strong fifth waves and quick fourth waves, which often give its 5-wave impulses a rather 3-wave look. They tend to start off kind of slow, and then they accelerate towards the end with a strong fifth wave. And so I think that might be what we're about to see over the next couple of weeks. So a little bit of patience, and don't worry too much about all the overlapping, because that's actually really typical. We have a truncation here, and truncations usually happen after a movement that moved too far too fast, and this is most absolutely fulfilling that definition. This could have been too far too fast, and so I have no problem with the fifth wave truncation in here. That meets the guideline for a truncation. At the daily chart level, this is now the bull wave count with a new low below here. I didn't want to see the possibility of that second wave correction continuing. It was just far too big in terms of duration. I want to look at the possibility that intermediate wave 2 or B may be drifting sideways as a double combination. The wave count is identical to the bull right up to this point here, and now instead of intermediate 2 or B being a zigzag, this may have been the first zigzag in a double combination. There are two big problems. The first problem is the X wave is quite shallow. X waves of combinations are usually a lot deeper than that, but the biggest problem is minute wave C of the second structure in the double, which is a flat subdividing 3, 3, 5, Minute C is incomplete. It's moving toward the middle of its third wave. It needs to complete 3, 4, 5, and I really don't see that there's enough room for downward movement for it to do that and not breach the invalidation point. For the bull wave count, I've spent a lot of time looking at this wave up that ends up here. There is only one possible corrective structure to see it as, which meets Elliott wave rules. It's a very rare triple zigzag, but it looks completely wrong because the second zigzag in that potential triple does not move far enough beyond the end of the first, or if at all. And so the only possible corrective structure this could be has all the wrong look, and it's extremely rare. I do not think this is a 3. I am confident that this is a 5. What that means is B or 2 may not move beyond the start of A or 1, below 1131.09. I do not think this bull wave count will be able to complete minute wave C down. At the weekly chart level, this is the regular technical analysis. We have another little bearish indicator now. Price is breaking through support at this green trend line, which provided support here and again here. And that's another bearish indicator. While price here made higher lows, on balance volume moved lower. We have some negative bearish divergence, and the breach of this long-held trend line on balance volume back to December 2013 continues. We're starting to see some increasing volume for this week. Overall, since gold moved into the sideways range, volume has been declining, and each series of downward weeks has a stronger week of volume than the following 2 upward weeks. The pattern repeated again here. Stronger volume here than the following 2 upward weeks. Overall, all of the volume indicators are bearish. At the daily chart level, this is where gold entered the sideways range. ADX still tells us there's no clear trend, but ADX does tend to be a rather lagging indicator when a new trend arrives. We have a lower low here, and it's agreeing with on-balance volume. Both on-balance volume and price are moving lower. This fall in price is supported by volume. In the very short term, though, there's a wee bullish indicator. These 3 downward days, although they're happening on strong volume, is seeing volume slightly decline with each successive day. And with the very long lower wick on today's candlestick, or Thursday's candlestick, that's a slight bullish indicator. We may very well see a green candlestick for Friday, which could fit the alternate bear hourly wave count quite nicely. It may find resistance at this horizontal trend line. I've drawn perfectly horizontal from this low down here. It's provided support here and here and here. Support starting to break here. It now may provide resistance to upward movement. So look out for that possibly to unfold on Friday, and that could resolve the short-term bullishness. That's all from me today with your gold analysis, and I hope that all of our members are having a most fabulous day.